Money Master the Game is an epic 650-page book. Tony Robbins basically interviewed 50 of the world's top billionaire investors and Nobel Prize winners and put it all together in this 650-page book. I have to say, this is an excellent book. I've read it 3 times now and will probably read it again just to absorb all the information contained. Welcome back guys, Nathan here, and in this video I'm going to give you a high-level overview of the 7 simple steps to financial freedom from the book Money Master the Game. If you find anything in this video useful, be sure to click that like button as always. It would be much appreciated and every like does help. Okay, sit back and relax. Here is an overview of the 7 simple steps to financial freedom. Step 1, getting started. So the most important financial decision of your life is this. You need to decide what percentage of your income are you going to invest each and every month to build a financial freedom fund. Now, for most people, if you can start with 10%, then that is a great start. If you can be investing 20% of your income every month, that is really great. And if you can build it over a few years up to 50%, then you're going to be way ahead of most people. Step number 2, become an insider. The $13 trillion lie. For most people, what they're going to do is go to an independent financial advisor or maybe a big reputable investment firm to invest their money. And the narrative goes something like this. Don't worry, we have funds that can beat the market consistently. We have low fees, so don't worry about that. And we have X number of billions in assets under management. We have 10 billion, 50 billion, etc., etc. However, this is likely the deal you are actually signing up to. So you are putting in 100% of the money, which means you're taking 100% of the risk. Now, if the investment goes up, you're probably going to be losing up to 60% of it in fees. And if it loses money, they still get paid. Welcome to the world of actively managed mutual funds. So what's the solution? Well, Tony Robbins recommends that for most people, we need to be using low-cost index funds. Step number 3, make the game winnable. Have you actually asked yourself how much money do you actually need? When he does this at seminars, a very popular figure that most people throw out is that they think they're going to have to save at least $1 million. Well, he recommends actually having 3 different targets. So the first target is just basic financial security. So the bare minimum, what do you need to cover your mortgage, your bills, and your food? You can then have a second target of financial vitality. So a bit more money, which will cover holidays, some clothes, other spending, and then have a top target for total financial freedom. This would be living in abundance. So what are these figures? Well, he explains the average expenses for a US citizen is about $35,000 a year. However, remember that you are going to be getting Social Security, or if you're in the UK, this would be called a state pension, which currently is about $18,000. So you actually only need to find $17,000, which is the difference. And if you 20 times that, your actual fund that you need to build is $340,000, which is a third of $1 million, which is what most people thought they would actually need. So that is your financial security number that we want to try and save and invest to. Then you're going to need your vitality number, so probably maybe just 2 times that. This would give you excess money for your holidays, your clothes, your spending. And for total financial freedom, if we 2x it again, so if we 4x the original number, you're looking at about 1.3 million for total financial freedom. And these are your figures. Now that you have your figures, what do you have to do to get those numbers? Well, Tony Robbins actually had a calculator that you can use on his website, and he basically was just compounding different amounts. So he was compounding at 4.5%, 5%, and also 7%. So you can go to any compounding calculator and do this yourself. So I drew up a chart which is compounding at 7%. So if you invested $50,000 at 7% growth rate a year over 30 years, this would come to $380,000. So this would get you your first financial security number. I also did one compounding 50,000 at 10%. So over 30 years, this would get you $872,000. So this got you your financial vitality number. And you can play around with these calculators. So you can invest more, you can invest less, you can compound it at a higher rate, lower rate, you can do it over different years. But this is how you make the game winnable, by knowing your numbers. Step number 4, asset allocation. Now it's the most important investment decision that you need to make, asset allocation. And he explains there's 2 primary buckets. You've got a security bucket, which is very safe investments which can't crash. And you have a growth bucket, which is more riskier investments which tend to grow faster. In your security bucket, this is things like bonds, cash equivalent, CDs, your home would go in here, a pension or annuity that you have. And in a growth bucket, this is things like stocks, real estate, commodities, gold, currencies, and high yield bonds. So you need to decide as an investor what percentage will go in both. Some typical scenarios. You could have, if you're very, very close to retirement, you might want to have 100% of your money in secure assets and nothing in growth. If you're a bit younger, it could be maybe 50 in 50. Younger still, maybe 30% to 70%. Or if you're a teenager or in your 20s, you may want to have 100% of your money in growth assets. Step 5, create a lifetime income plan. So at his seminars, he always asks people, so what are you actually investing for? And some typical answers that people give would be for returns. Some people want growth. Some people want assets. Some people wanted freedom. But he explains the objective, what we're actually trying to do is this: create an income for life. Now, there's a thing called the 4% rule. So once you've grown your financial freedom fund, the general idea is that you can draw down 4% every year to live on. However, he explains there's a big problem, and it's called the retirement lottery. You see, depending on when you retire is going to give you a very different result, and this is a complete lottery of when you were born. For example, if you were born where you were due to retire in 1990, then you would have had a glorious retirement drawing down 4% a year. However, if you were to be born in a year where you retired in 2008, then as soon as you retired, you lost 50% of your freedom fund. Now, if you start drawing down 4% off your portfolio, which is already lost half, then you're going to run out of money in retirement. So he explains the 4% rule is dead. So what is the solution? How do you not run out of money in retirement? And the answer is you use an annuity. So what exactly is annuity? It's very similar to a pension. So what you'll do is you'll take your freedom fund and you'll give it to an insurance company, and they will guarantee an income for you for life in exchange for your money. So it's a little bit like life insurance. You'll probably get something around 4% for life. And the good thing is, if there's a market crash, it doesn't affect your income. You will still get paid. Step number 6, invest like the 0.01%. Invest like the billionaires. So we had a series of interviews with all different billionaires like Warren Buffett, Ray Dalio, Carl Icahn, David Swenson, Jack Bogle, Paul Tudor Jones. And in this series of interviews, they pulled out lots of golden nuggets. Some of the top highlights for me were they all recommended that for most people, index funds is the way to go. They all had a very big fixation on protecting the downside, making sure you don't lose money. The other one was asymmetric risk return, so only invest in things where you can potentially gain a lot more than what you can lose. So you could potentially gain 5 times but only risk 1 or 3 times, so an asymmetric risk return. The other one was investing at maximum pessimism. So when markets crash, what most people are doing, they're panicking, they're selling, but these billionaires know that the stock market has always recovered, and these are the best opportunities. And step 7, do it, live it, share it. So this was the final chapter. Now, trying to accumulate wealth can take many, many years, and it can cause a lot of frustration. So he was basically explaining that you're already wealthy right now. In fact, compared to the human history, we are all living like absolute kings. So you really have to remember to really appreciate what you have in your life right now. And remember, the real goal is not money. The real goal is happiness, as he has met lots of miserable millionaires. So it can't just be about money. Now, for happiness, it's proven that perceived progress, as long as we are progressing in our lives, this is what creates happiness. And the other big thing that creates happiness is giving. It's been shown from experience and research that giving, whether that's your time or money, is a great way to create happiness. So there you are, guys. That was an overview of the 7 simple steps to financial freedom from Money Master the Game. Reading the book really is like doing a degree in finance and investing. Obviously, there's so much more covered in the book. I only really scratched the surface of what I could cover here. It really is a great book, and I do highly recommend it. And for anyone that would like to pick up a copy, I do have a link in the description where you can pick up a copy from Amazon. And thank you very much for anyone who uses that link in advance. So if you found anything in this video useful, be sure to click that like button. It really does help the channel, and every like does help. If you haven't yet subscribed, be sure to click that subscribe button below, as I do have some great videos coming up that you don't want to miss. And tell me, what do you think about Money Master the Game? Is it a book that you've read yourself? Let me know any questions, any comments in the comment section below. Okay, cheers guys, I'll see you in the next video, and it's bye for now.